we're finding that while markets may have been rebounded over the past week, there's undoubtedly going to be an impact on the U.S. economy and indeed the whole global economy from the fallout in Britain, the impact on the European Union as well. In the United States, we expect activity to slow because slower exports, the stronger dollar, increasing uncertainty, holding back investment. Overall impact probably on the order of a quarter percentage point of GDP off growth over the next year or so. The Fed will have to respond to that. We don't expect the Fed to raise rates anytime soon, maybe in December, maybe not till next year.
Is that the response, or are you looking for some additional easing measures?
I think for the United States, that's adequate. There is an impact, but I think with the degree of Fed easing, I think the U.S. economy will continue to grow at a reasonable pace, continue to move towards full employment and the inflation target. So I don't think the Fed will need to do more than just hold off, be a little bit more patient.
What did you find in terms of the hit on GDP for the UK and for the larger EU?
Right. So we're much more worried about the UK. I think it's clear that the UK will go into recession in the second half of the year. There's massive uncertainty about how Brexit will play out, what will be the post-Brexit arrangement for trade, for finance between the UK and Europe. So that will lead to we've already seen a substantial drop in consumer confidence. We're expecting to see a big drop in business confidence. The pound has weakened 10%. That's a major hit to the UK economy. Europe, too, huge trade partner of the UK obviously. Sure. We expect Europe to soften in the second half of the year, which is a real problem for the ECB, given that they're working very hard to try to get their economy going, to try to bring inflation back up. So we expect a further easing package from the ECB in the months ahead.
Wilfred?
Charles, do you think we'll ever see monetary policy normalize around the world? I mean, whenever we start to get close to interest rate hikes, it seems that just any factor around the world, whether it's across an ocean, leads to people to have to ease again. I mean, the world seems too fragile to ever come off easy monetary policy.
Well, Brexit was certainly a big shock. This is a once-in-a-lifetime event, so I don't think you can see that as business as usual. I think the good news is that the U.S. economy is in reasonable shape and should be able to weather the shock reasonably well. So I don't think the Fed actually needs to take any further easing measures. I think they just need to be patient, wait to see how this plays out, make sure that markets are absorbing the shock well, make sure the U.S. economy is continuing to grow at a reasonable pace, and then they think they can get back onto their tightening path again. But that'll be not till the end of the year at the earliest.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.